Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategist. Today, we are lucky enough to be joined by Senior Technical Strategist and Managing Director Todd Sohn. Todd, how are you doing today?
I'm great, Ross. Always a pleasure to speak with you.
Good to talk to you as well. I want to get your sense of this market. Bit of volatility here over the last couple of weeks. In a bit of a drawdown. Nothing that would make any historical lists, but really the first kind of patch of weakness amid this rally off the April lows. So, what do you make of this? What are you seeing? What are you watching closely to identify whether this becomes something more serious or is something that the market can shrug off into year end?
Yeah, it's been 7 or so months since we've had a real speed bump in the markets, as you mentioned, and I think it's more rotational than anything. You've seen some areas like small caps come in, some high beta, high flying type momentum names have come in, but it hasn't been enough to hit the overall market, so you're not really oversold yet. It leaves us in a tiny bit of an uncomfortable tactical position. Normally, you like to see put call spike. You want to see the VIX curve invert. There's some evidence of that. And you want to see 20-day low spike. And that usually presents a really good buying opportunity when you are in a global bull market like we believe we are in now. So going forward, maybe stay patient, right? We'll look for that oversold condition to start adding to equities into the first quarter of the next year. And I just want to be mindful of what the credit backdrop is, right? The private capital stocks, which we can talk about in a moment, have been a little bit weaker. Does that leak into broader credit markets? I want to keep an eye on high yield spreads, corporate investment grade spreads. If those starting to widen out with stocks rallying, that's a little bit more concerning. But for now, I think you want to stay the course if you're looking to opportunistically waiting for that oversold condition to develop further down the line.
Well, and you mentioned that a lot of the kind of high flying, high beta, risk on sectors have gotten hit especially hard. A lot of times when I'm talking to you, I ask about sentiment, what you're seeing in ETF flows. And that's a big part of the question of whether this has been a bubble the whole time or not. What do you get a sense of? Does some of the air coming out of those stocks help the sentiment picture from your perspective? What else are you seeing as far as bullish versus bearish on the investor sentiment picture?
Yeah, that's a great question. You've definitely seen the air come out of the leveraged corners, right? Leverage has definitely been rampant, a little concerning on my end. But now you are seeing these 2X names from those high flyers compress. If there's one risk that's out there in terms of sentiment, I do see that equity ETF flows overall have really accelerated recently. You're doing about $5.5 billion per day. That's meaningfully higher than any of the last few years. So equity ETF flows are hot, but I do like seeing these levered corners compress, as painful as it might be for some folks out there. It's almost a necessary condition to get that overall sentiment temperature lower going forward.
Yeah, that makes a lot of sense. Okay, so you mentioned less of a broad sell-off, more of a rotational market. What pockets of the market are working? What is that telling you? Are there any unloved or under-discussed sectors that you think are worth shining a light on?
So it's healthcare. Healthcare is a big input for us right now. We love healthcare. It's been ice cold on the sentiment front. Healthcare sector ETFs have seen major outflows over the last year. It's a sector that really, frankly, has not worked and been off the field for quite some time. But we think there's a lot of runway here, especially if you're looking to play a little bit of a defensive tilt. Healthcare can carry those types of characteristics, especially in the pharma and equipment space. So we're very opportunistic on healthcare, especially as a way to water down tech and growth exposure too. And we think there's meaningful runway before the sector becomes too overbought, too overcrowded, whatnot. There's a lot of negativity to reverse going forward for healthcare. So interesting place. And it's also a significant weight in the S&P that can help carry any sort of weakness you might see from the top of the index as well.
Makes a lot of sense. Great spot for investors who are almost certainly underallocated at this point, given its kind of long-standing weakness. So good to call that out. Todd, as always, very insightful conversation. Thank you so much for the insights, and we'll look forward to talking to you again soon.
Thanks, Ross. Talk to you soon.